We need to talk about how investors are lying to you. Now, let me start off by saying I'm not saying investors are bad. Investors are important when it comes to investing in startups, and you may need to work with investors. You probably will if you're building a successful startup. But it's a type of investor and their incentive structures that I have an issue with. The other day, I heard an investor talk about bootstrapping and say, why would you want to bootstrap? Bootstrapping is really dumb. It's like stretching out your funding over the lifetime of the startup. And I get it, bootstrapping can be hard, but I've heard this so many times, it starts to get under my skin because I believe it turns into a lie that founders fall for. And in this video, we need to analyze where that comes from and what you might want to do about it. Before we continue, my name is Ed Kang, 7-time funded founder with 2 exits. That's just a fancy way of saying I failed a bunch of times. I've learned more from my failures than my successes. And I use videos like this for your benefit because I want to help founders, especially early stage founders, raising seed, pre-seed, avoid some of the catastrophic mistakes that I've made. I have raised over $100 million from my startups, other startups, and startup funds, and I've made all the mistakes you can imagine, especially working with investors. I'm also the Chief Strategy Officer for Startups.com. If you haven't checked us out yet, check us out there. If you are here from Startups.com, I want to say thank you so much. I love being in the community with you. While you're here, like, comment, subscribe, do the YouTube thing. Let me know what you think about these videos and different subjects and topics you want me to talk about. More than happy to respond. Let me let you in on a little secret. I have only worked with one investor in my lifetime that I enjoyed working with, and I'm still friends with that investor. It was an angel investor, and I'm still friends with him to this day. We still do ventures together. I've worked with all the other types of investors, from angel investors, hedge funds, institutional capital, syndicates, you name it, accelerators. Who else have I worked with? I've worked with senior family trusts, I've worked with banks, and I have not enjoyed a single interaction with any other type of investor. There's only been one check that I have ever written to an investor that I enjoyed, and that's with that first investor. When he invested in my company and we sold that company, I was so happy to write him a check for a nice fat return on his investment. Every other investor has not been fun. Why? Because I'm the type of founder that likes my freedom. I like autonomy. I don't like other people breathing down my neck. I love being responsible and I love being accountable to my users, my stakeholders, and my board, the people that I trust. But investors, if our incentives and what we're trying to do not align, I do not enjoy working with investors. And we say here at startups.com all the time, when you get an investor, you are hiring your own boss. So many founders don't understand what that is actually like. As soon as they write a check, there's an operating agreement. They tell you can't hire people, you can't fire people unless I get a say so. I'm going to sit on your board, control the decisions, not to mention your own salary. What are all the implications of signing that deal? And if you sign the wrong deal with the wrong investor, you can get led down a path. And I've seen so many founders regret taking the venture capital. Let me go back by saying, I believe venture capital is an important part of the startup ecosystem. Sometimes a startup needs to grow a lot quicker and they need VC and the incentive structures are aligned. But I believe venture capital has to change. It's not 2021 anymore. I believe there are a lot of bad habits that have gone into the venture capital industry, and we're seeing the vestiges of that. We're seeing the fallout, and it's painful for founders. But why would an investor tell you that you can't bootstrap? You should not bootstrap. I fell for this one time. I had an investor and someone who raised capital come to me and they say, Ed, if you don't raise capital, we're worried competition is going to come crush you. You need to raise capital. And what were they doing? They were selling me on owning parts of my company, helping raise money. And I jumped through so many hoops. I did so much to try and raise that institutional capital. It was crazy making. Used up all our time, caused so much tension between co-founders. And in the end, I didn't raise any institutional capital whatsoever. It became a really tough time. This was right at the beginning of COVID. You know what I did? I said, fine, I'm going to crowdfund and pre-sell our product. And guess what? Investors came running to me after I showed my results. And then we kept trying to raise venture capital. It was crazy talking to accelerators and other companies. Other people saying, now we'll give you money if you pay us for our services. There were all these crazy deals. I'm sure if you're a founder out there, you have seen all different types of deals. People want to take so much equity just for showing up. It made no sense whatsoever. How many times have I been in the hamster wheel trying to make investors happy, and I've regretted it every single time? Look at the business model of investors. They need you. They need to invest their money into a startup that's going to go 5x, 50x, 100x, so they can pay back their limited partners. That's how venture capital works. So they're going to put a ton of pressure on you. And I know founders that said, Ed, I wish I wouldn't have taken that $7 million. I wish I wouldn't have taken that $15 million because we have venture capitalists, we have our investors breathing down our necks saying, you need to grow faster. You need to spend 50 cents on every dollar in advertising, hyper growth at all costs, not thinking about the health of the company, not thinking about the health of the founder. And they just want to see that portfolio numbers go up so they can sell that asset up to the next round and say, look at the growth. Now you want to invest in the A round, the B round, and everybody starts making money, but they're just pushing you along in the factory model. So of course an investor is going to say, you need to raise capital or this, and this is going to happen. Bootstrapping is so hard. But I have so many stories of companies that have bootstrapped and they're very successful. Let me tell you two. Worked with a founder at startups.com. He was profitable in month 3. Last I heard from him, he had 40 million users. He has investors, private equity companies contacting him every single week. It just drives him nuts. He takes his meetings here and there, but he says, Ed, I'm not interested. That's the position you want to be in. I know another founder. He built a social media platform. He makes $20 million. He raised a little bit of money from a friend who just wrote him a check to get him started. Now he makes $20 million a year. Of course, people are going to throw money at him. You know what he does? He goes kite surfing around the world. I see his updates, and he's just enjoying beaches and traveling around. Great lifestyle. I'm jealous. Let me give you one final example that's going to blow your socks off. Midjourney. I don't know if you use Midjourney. I use it. It's the generative AI platform on Discord, and I pretty much use it almost every single day. I love the product. Last I heard, that company is doing $200 million a year, bootstrapped with 40 employees. Instead of writing checks to investors and going crazy trying to run in the hamster wheel and grow, they share their profits with their employees. And they share profits, the revenue sharing, with Discord. They have the largest Discord server in the world. Investors would have told them, you need to build your own app. You need to build your own thing here and there and push them for their own hyper growth. But they made a partnership with Discord, allows them to be profitable, and they don't need as many engineers. And they're building a wonderful infrastructure because they went where the customers are. We're all on Discord. And so now investors, other partners, other stakeholders need Midjourney more than Midjourney needs them. They've switched the power dynamic, and that's where you want to be. You want to build a company that does $5 million, $10 million, $20 million a year, completely profitable, great cash flow without having investors breathe down your neck, so you are in the position of strength should you ever want to raise capital, should you ever want to sell. Because that's the best time to raise capital. That's the best time to sell when you don't need to. And I'm not talking about raising friends, family, and associates round. It's okay to raise a little bit of money here and there, but think about it. Someone writes you a $100,000 check. Let's say 2 investors write you $50,000 check each. And you turn around and in a few years, you write them a $100,000 check each. You double their money. That's absolutely fantastic. You can't double the money with a venture capitalist. They're going to tell you, if you do not 10x, 15x, 50x our money, then you're dead in the water. I'm going to talk to a founder who had to shut down because he could not grow fast enough to meet investors' demands. And there was so much pressure, they couldn't crack it when really they had a choice. They had an opportunity just to do a really solid business. And I'm not saying every founder needs to do that. If you are building an Uber, an Amazon, an Airbnb, an OpenAI, I get it. Go have fun. But my argument is not everybody needs to go that route. But investors are going to tell everybody, every founder, that you need to go that route. You need to raise money. Why? They don't want to miss out on a deal. They get FOMO. They need you more than you need them if you're building a great startup. Fear of missing out, turn the tables around and make them need you more than you need them. Let me end this video by summarizing. You do not always need investors. In fact, sometimes investors will be the bane of your existence and they will tank your startup. The same thing with picking the right co-founders. It's all about founder-investor fit. I want you to consider bootstrapping because you might have that type of startup into a really great business and think about VC later. That may mean you need to pull things in and you need to minimize what you want to build and what you want to spend and focus on revenue. And that's what investors want anyway. Focus on that profitability. Focus on the unit economics. Focus on making money. I had a chairman, an advisor, who told me, Ed, when in doubt, if you don't know if you want to raise money or what you want to do, go make some money. And I have used that piece of advice every single time. That's the reason I love bootstrapping. I love running my venture studio. I love writing little angel checks here and there and doing my own thing without having investors breathe down my neck. That's just me. Some founders can handle that type of pressure. Some founders love having boards and love having investors and love spending all this time. But I know CEOs that literally run around trying to make the board happy. And every single time there's a board meeting, even though they're making $68, $78 million a year, that's what their budget is, they have to do all these reports and do all these presentations. There's all this bureaucracy, and that is insane. That's not the way that I want to go down. My health has taken a huge toll. I paid the price because of investors working in the startup grind, and it's just not worth it anymore. And I don't want you founders out there to make the same mistake if you don't have to. It's a great experience. Don't get me wrong, but it's not necessary anymore. It's not the same as 2021. Markets are changing, the industry is changing. So I really want you to consider bootstrapping and building a really great company. I am here to help you. We are here to help you at startups.com. I've developed a really cool tool that you can use to do this. It's called the Startup Early Stage Funding Canvas to get you your first $100,000 check, not from institutional investors, not necessarily, you could if you want to, but for friends, family, and associates. But the best part about my tool is if you do it correctly, you may not even need investors. And that's where you want to be. That's where I'd love for you to be. Hope this has been helpful. Watch some of these other videos that I put on the screen. I've got lots of information. And if you're thinking about it, come join us up at startups.com. Check us out. We got a lot of free resources online. Hang out with me. Like I said, let me know what you think. Leave a comment. I appreciate all the feedback, and I will see you in the next video.